What's up, everyone? You guys hear me? Use the chat feature if you can hear me. Okay. First of all, who's been trading with us this past week? Whether you're, in Aces or Boiler Room. For the most part, I literally send every single trade that I make on both chats, so it makes no difference. One thing I want to show you. So you guys saw my TradeZella insight yesterday. So I updated it with today and it like kind of dropped, even though I was green. But this is how it looks today. So essentially, this is the last, how many days is this? So based on what you see, what do you see here? Well, what are you looking at? So this is the past since the 23rd, which is Monday. So from Monday to Friday, the net P&L 17,000. Started with 5,000. So now I'm up to what, 18, 19, 20, 21, around 22, 23. I actually got it up to like 26, 27 today. But I did some stupid shit. But regardless, the win rate. So I've had how many trades in total? 25. 19 of them were green, 6 of them were red. Now, on average, what it does is it looks at an average of how much you make per trade, right? So my average winning trade was $960. Now, mind you, I started with 5,000. So, is that a good average winning trade for someone that started with a $5,000 account? It is, right? So there you go, Angel. That's what I've been waiting for. 20%. Essentially, I'm averaging about 20% of 20% return a day on the portfolio. That's essentially how you got to look at it, right? Average losing trade is 193. It was actually at like $79 yesterday, I think, I believe. An average winning trade was like 1,100. But anyways, I'm trying to get this up to like a 50,000 by next week, which is kind of going for like, going for overkill, but I think I can do it. Now, what I want to tell you is, what stocks did I trade in order to do this? Right? I literally only traded about, I'm going to show you the trades right now. I think you can do that, right? Trade log. There you go. Okay. So look, so from the 23rd, literally from the 23rd to the 27th, how many names do you see? What is the most common? I only traded about 3 different names, and that's it. Just SPY, Tesla, Netflix, Amazon, right? AMD. So essentially, SPX, and SPY is the same thing, right? Now, why is it that I traded SPX and not SPY on this day, on Tuesday? So I'm going to give you guys some gems today so you guys can understand where I'm coming from and how to grow your account fast. right? So I did 0 dates, right? 0 dates. So essentially, what kind of approach am I taking on this account? It looks nice, right? It looks really nice. It looks really nice, but I am taking trades that are very, very fucking aggressive, right? But regardless of how aggressive the trades are, what do the stats show on the screen? I am able to do what? I'm able to manage my risk, right? I'm able to manage my risk. I have really fucking good risk management. Now, is it because the market has been really well? Not necessarily, because I know some people were red on Monday and Tuesday. So you can't really blame it on the market. It's just about, what do you guys think the answer to the question is? If you really boil it down to something, what do you think the answer is? So taking high probability trades, right? Now, what does that mean exactly, right? So when we're looking at high probability trades, now I always trade breakout trades, and for the most part, I don't know how far along you guys are in terms of your knowledge, but for the most part, what I'm doing is I am doing this. So let's say, I have, price swings that are doing this, right? Let's say you're looking at a daily chart. Now, I'm going to enter the trade right here for a breakout. Right? Why am I entering this trade? Well, because this is a resistance level. That's and I'm saying this as simple as I can, and you guys are probably like, oh, dude, like we know what the fuck that means. Like, but what I'm trying to say is I focus on specific time frames and focus on specific levels that allow me to figure out whether this level is going to, whether when this level breaks, it's going to make a move or not. Now, how do I do that? Right? How do I find these specific levels? So it's not just, it's not your typical simple support and resistance, meaning, I'm not just going on, like, for example, what is the guideline on making support and resistance? So let's go on, go on SPY or something. What is your guideline on making support and resistance levels? You start at the higher time frames and you're looking at, 2-3 touches of the candlesticks. You're just doing this basically, right? Am I right? Now, this is one approach to take, right? What I haven't really showed people is how to take it from a different approach. And would you guys like to know how to do that? Okay, so the approach that I take is this. So if I start drawing on this board, right, I'm gonna start drawing the ups and downs of the stock. So I'm drawing the ups, which are called the what? So these are the swing highs of the stock, right? So what I'm essentially doing is I'm going to start making levels on the higher points of these tops. Meaning if these are, how do you get that marker on Thinkorswim? I'm using the zoom marker, but I'm just showing you a visual representation of what I'm actually doing. Does that make sense? Like you can just imagine that's what you're doing. Okay. That's I'm just showing you. So essentially, if you're looking at this, the top points, right? I'm going to start making levels on the top points of where I made this. So I'm not just looking for 2-3 touches. All I'm looking for is the swing highs and the swing lows, right? That's all I'm looking for. I don't need to go look for 3 touches for the wicks. That's not what I'm looking for. This allows me to eliminate certain levels that I think you don't need. Do you guys believe that there are some levels that you end up making that you don't even fucking need? Exactly. So what Shalab just said, I'm looking for the sharpest moves that's happened on SPY, right? Now, let me delete this one. Now, what am I gonna do? What am I gonna draw now? I already did the top. I'm going to draw the bottoms. And some of these levels have already been tested from the top. Am I right or am I wrong? Look, some of these levels have already been tested, right? So this just goes to show you how accurate this is. This just goes to show you like, okay, well, now I know what I'm doing is, it's correct. Meaning these levels do test and they do hit. What time frame am I looking at? Daily. Do you take that? Where'd you put it, babe? Um, my bad. Hold on. Let me how do I do this? You guys hear me? Okay, now I'm making the other one. Okay. The bottom parts. And after this, do you think I need to even go and make support and resistance levels, using the 2-3 touch rule? No, this is enough for me, right? This is enough. So these price levels are close enough to each other that I can use them as my entry and as my exit. Correct? Boom. Now I'm good. So now what I'm going to do is I'm going to go to the hourly, right? I'm going to go to the hourly and I'm going to check and see if these levels are accurate, meaning if they've been tested multiple times in the past. So 4 hours, just to double check. Now, what you need to start doing after this is once you move on from the daily, right? Made trading a no-brainer, basically. So now what I'm going to do is I'm going to identify what do you guys think I'm trying to identify at this point? After I made all those swing highs and swing lows, what's next to identify patterns, right? Patterns or candlesticks, things like that. So first thing, anyone spot anything? So this is what you can actually do, right? You can start making trend lines. You can start making trend lines on these support and resistance levels that you see. Like I can make one go across this whole thing, right? I can make one go across this whole thing. And does this test support and resistance in the past? Yes. Now I can do I ever use TTM squeeze? Yeah, I used to use that all the time. Not anymore though. So now that I have these two lines, what do you think is happening here? What had just happened to SPY? If you look at the bigger picture, I don't use it anymore because it's not I don't need to use it anymore. It's just like I'm simple about my price action now. Um, I used to use like a bunch of like indicators like the the Bollinger Bands, the TTM squeeze. Now, why do you think I stopped using those? Is it because they're not good to use? Is it because they're lagging? It's just like you don't really need all that noise exactly, right? If like, do you guys think I use tape at all? Do me and Brett use tape? Does that word ever come out of our mouths? And have we been doing fine without it? Yeah. It's just simple price action and levels. Now, here's the thing. Just like Jose says, you got better on reading charts. So all I have to do is dissect what's going on within the charts, right? That's all I'm doing. And I'm trying to figure out where the supply and demand, where it lies. So if I was looking at this, so for example, the other day, like a few days ago, when SPY was here, right? And I'm looking at this, whatever's going on, in this bubble right here, right? What does this tell you? So all you have to do is figure out the price action that's going on. So there was a lot of consolidation from here to here, right? Now, during this consolidation, what had happened, right? And this is how you dissect, what's going on. What had happened? So, first of all, you had the candlesticks. What had happened? They began showing signs of forming higher lows, right? And as the lows got higher, right, what were we waiting essentially for? So essentially, if you're using the moving averages and you're trying to um cross-reference it with the stochastic, all I'm waiting for is for the levels to break out of those moving averages and break out above the trend line at the same time. Right now, what is our, what kind of strategy do we use? For example, what is our main, I'm pretty sure you guys should all know this by now. What do you think my main strategy is? So first, if I'm gonna look at something that might, come up, right? I'm looking for two things. So for example, let's start here. This red line and this purple line, right? So this is what's called a stochastic slope, meaning it represents momentum. So what's happening with the momentum? The momentum is from it being up here to it coming down, meaning it's doing what? It's slowing down and it's coming into a bearish momentum, right? Now, this indicator is different from what an RSI is, even though they kind of look the same in terms of how they're structured. When you have the red and purple lines above this blue 80, it means the momentum is strong. And when it goes below this blue 20, it means the momentum is strong to the downside. Above 80, strong to the upside. Below 20, strong to the downside. Now, as you can see, once it went below here, the stock price was here, right? Did it keep going down as it was below here? It kept going down, right? It kept going down. It doesn't mean it's going to reverse. The only time it might reverse is if it were to cross above the purple line, right? But what has to happen after they cross? What else has to cross over? This is why this strategy that I use is a systematic trading strategy, because two or more things have to happen in order for me to enter the trade. That's why it's called systematic. Because if I'm just, if I'm just using the stochastics by itself, do you think I'm gonna be, you think I'm gonna make a lot of fucking money and be right all the time? No, right? I'm gonna end up, I might catch some moves, but I won't be as accurate. Now, what is the downside of having a systematic strategy? What do you guys think the downside is? There is a downside, but what is the downside? It's not too big of a downside, but it is a downside. So one, you won't be in every trade, and two, you have to wait, right? For example, I would have to wait for this move to make for me to short this. Does that make sense? So the stochastics is crossed, and then instead of catching this candlestick, I have to wait for this candlestick to show up for me to enter puts to the downside. So meaning I would have to wait till we get down here, and then I would have to, hold my trade. Meaning, if I'm using a 4-hour level, right, that means that when I'm looking at crossovers, I'm looking at what the price action might do for the rest of the week. That's the answer. Does that help? Does that make sense? What I'm doing is I'm essentially looking at it where it's like, okay, well, now it's crossing. Now I think that we're gonna have a bearish week, and I should look for trades to the downside. I'm not essentially saying go swing puts to the downside, because it might be sideways, it might not, but what I'm saying is the direction might be bearish. Make sense? So now, when you have a bias coming into the week, it's not bad to have a bias, but now when you have a bias, you can spot trades easier, because if you see that, your strategy works, then what you're going to do is you're going to trust that strategy, and you're going to come into the market looking for trades to the downside. So regardless of regardless of whether if you're looking at the 4-hour chart versus looking at a 5-minute chart, right? Which one is more telling of a direction? The 4 hours. So if you're looking at a 4-hour chart and you see this crossover to the downside, and you see this bounce right here, are you immediately going to buy the dip and trade it to the upside? No, right? Because one, we're still below the moving averages. Two, we're below the resistance level. Three, the moving averages don't even look like they're going to cross. So regardless of whether you see that bounce or not, these are where the fake outs happen. So if you have the strategy, if you know the strategy, then you're not susceptible to coming across fake outs. Does that make sense? Like, I don't get faked out easily, and I stick to my direction. And if, how many of you guys have seen me, trade or whatever, and it looks like it's going to be bullish, and I'm just like, yo, no, we're buying puts against this, and vice versa. So all I'm looking for is the crossover, and then I'm looking for the crossover here, and then now I have a sense of direction. Teach us the strategy, or is there a video of the strategy? What the fuck have I been doing this whole time? Jesus. What's up, Moby? Moby Dick. I wasn't even finished yet, but I'll answer some questions. It's not taught, it's caught. Nice. Can you recap a few recent trades you've taken? You can do that too. What indicators are these? Can you post this on YouTube, please? Holy moly. Damn. You guys really don't watch YouTube. You guys literally don't watch. Okay, so I have like 30, I have like 20 videos up, right? And like 75% of them is me telling you what I'm telling you right now. Anyways, so two things, right? For those of you who already know, this might be boring to you, but two things, this and this, right? Now, for example, you see this crossover here. Now, this crossover here, and you see that the stock is moving up, do you immediately assume that you're going to, the direction of the market is going to go up? Bro, Moby, shut the fuck up, bro. Yeah, I'm about to kick you by. Like spamming the chat. I can't even read what people are saying. But look, um, just because it crossed over doesn't mean I should go buy some calls, right? Now, in order for the direction of, in order for the shift in direction to be complete, what has to happen? The candlesticks must be above both of the moving averages, because the moving averages, the 9 and the 21, they serve as what? They also serve as resistance levels, right? Not only do they serve as, crossovers, they serve as resistance levels. As you can see, you got it hitting resistance here and here and here, right? So until you see candlesticks above the two, then you don't buy calls. Now, is that considered a downside to this systematic strategy? Because now you have to wait for a big move to happen for you to even try to go in the other direction. Make sense? But based on research, right? Based on research, based on historical data, we see that this, on average, this strategy will work out 80% of the time. Now, even though it works out 80% of the time, why do most people still fail? So even if you have a strategy that works 80% of the time, why do you think you still fail to be profitable? Here's the thing that people deny, is the fact that if they have a profitable strategy, they'll make money. But then what the fuck happens after that is they end up losing. So it's not the fact that the strategy doesn't work, it's just that it works, right? You were green at one point and you just let it go red, and that's what happens. And then you automatically assume that your strategy doesn't work when you're over here denying the simple fact that you can't, you're doing something wrong when it comes to how much you're risking, when it comes to how much you want to, when you want to take profits at, things like that, right? Now, the time frame of this strategy that I just use it for the 4 hours. Now, after I do that, right, after I look at the 4 hours, then I move on to the 1 hour levels, but I'm not looking at the same thing I was just looking at. Because if I'm looking at the 1 hour, what do you think can happen to the stochastics? Do you think that it can kind of confuse me? Like if I'm looking at a 4 hour level, a 4 hour chart, and it's telling me that, okay, the stochastics is telling you it's going to be bearish, and then the hourly is telling me it's going to be bullish, which one should I go by? Which one is more? The 4 hours, right? So if you want to use this for a specific time frame, then you stick to that specific time frame and you figure out whether that time frame will work out for you or not, and you back test it and you try it out multiple times and you see where it goes. But for me, 4 hour works best. So here you have another crossover. This time we crossed over to the upside. Now you have a 1, 2. Now what happens after that? You have a consolidation plus a what? A bull flag right here. A bull flag and a breakout of the bull flag, which is also a resistance level that it's made in the past. Right now, once you break out of this bull flag, where is your profit target? Where's your profit target? Where this is, right? So your profit target is going to be around here. This is your profit target. Now, if you're looking at the bull flag and you're looking at, so when you're looking at flags, right? What happens before the flag? The pull is right here, right? So when you're looking at the pull, what it means is you're looking at where it last broke out of a significant level. So you can either look at it from this perspective, or you can look at it from when it broke out of the moving average. But I think that this is more of a reasonable, breakout right here. So now if I take, the distance from here to here, right? If I take that distance, hold on. And then if I take that distance and I put it where we break out of the bull flag, you think it's the same distance or no? Right there. Is that the same distance? Right? So this concept works most of the time, but this is just such a good setup, right? Because not only do you have a bull flag and a shift in direction, you also have a profit target that is close enough for you to be able to profit off of. So this was a what? 402 to 408, a $6 move on SPY could have got you about 200% easily, especially if what day was this at? A Tuesday. So that Tuesday, on Tuesday, what did I trade when I showed you guys in the beginning? What did I trade? SPX. SPX what? SPX calls 0 dates, right? So how is it that I was able to grow my account exponentially in such a short amount of time? Because I'm taking high probability trades, but also using a lot of risk. Meaning I'm using a lot of my capital of what I start with, but my stop losses I'm keeping short. As you can see, if you guys weren't here, we were looking at this. So my average winning trade for the past, because this is from Monday to Friday, from 5,000 to 22,000. So I made about 17,000 so far from using 5,000. So it's now at 22,000. But my average winning trade was 960, so about 1,000. And on average, on a losing trade, I'll lose $200. Now that was based on today's data. Yesterday's data, it was like $70. It's because I took 2 losing trades today and it went down. My profit factor was like 70 last night. Today it went down on 15, which is still good because some people can't even keep profit factor above fucking 2. You guys even know what that is? Like, do you know how hard it is to keep a profit? Because if you have a profit factor above 1, above 0, what does that mean? If you have a profit factor above 0, that means you're already green. That means you're profitable, right? So what is a profit factor, guys? So a profit factor is defined as the gross profit divided by the gross loss for the entire trading period. So this performance metric relates the amount of profit per unit of risk with values greater than 1, indicating a profitable system. So if my profit factor as of yesterday was 70, what the fuck did that mean? That means I was exactly 70 to 1. Right? And right now it's 15, 16 to 1. It essentially. Anyways, how do you get to that? How do you get such a high profit factor? It's because first of all, you're not losing. I'm not losing any day. Regardless of if I've had losers that day, I'm cutting the loser short. Right? Now here's the thing. How am I able to cut? And here's where you guys need to fucking pay attention. So if I'm making these big trades, right? If I start with 5,000 and I was using 3,000, 4,000 per trade, how am I making 3 trades a day? But on the losing trades, I'm only losing 200 with the cash account. It's not a margin account. So how am I able to like, spread out all of these trades in a way where I'm only going the most money I'm risking I'm sorry, the money that I'm risking the most on is on the trades that I have a feeling is gonna go the right way. Does that make sense? Because let's say you're using 5,000, right? And you're using 3,000 on I'm using at 3,000 on a SPX trade, and then I'm using 1,000 on Amazon and 1,000 on Tesla. So I'm risking more on what can give me the most profits. So I'm risking more on which trades. Not only the high probability trades, but I'm risking more on the 0 dates because I want to be able to grow my account exponentially. Now, you guys don't have to use that method. You guys don't have to trade the way I do because you can fuck yourself up. And mind you, right? It doesn't mean that you can do this tomorrow. I mean, obviously, if you follow the signals, then yeah, but I'm just saying, if you want to get to this point where you can do this by yourself, what you have to do is you have to just take a bunch of fucking trades and understand when you lose, how do how does that loss happen? Now, that experience doesn't even have to come from trading live. It doesn't have to come from losing. Essentially, it doesn't have to come from losing real money. Because if you use Thinkorswim, what can you do? You can literally trade on demand. You can go back to, you can go back in time and trade what happened 6 months ago, 7 months ago, 8 months ago. So what I used to do was, I don't know if you guys saw me write this on my story, but back then I used to trade on demand about 4 hours a day, 5 to 6 hours a day sometimes. Right? What am I doing? I'm practicing I'm practicing my entries and I'm practicing my strategies. Right? That's all I'm doing. What's the short answer why you trade SPX 0 date for or a few days, weeks out? So what's the short answer of me trading 0 dates? Because I'm trying to make money fast. What is the point of buying 0 dates? Is it because it's cheaper? No. It's not because it's fucking cheaper. That's one reason, but it's not the main reason because it's so volatile. And if you're looking for a trade, right, and if it goes your way, you'll make a lot of money. Now, does that mean you trade 0 dates every day? No, I just happened to catch really good moves this week because I was waiting for the right moment to strike. Does that make sense? Right? That point right there. Look, so because here's the thing, had I done that last, last Monday, no, had I done that last, what, like 2 weeks ago or something, right? It wouldn't have been as profitable and it wouldn't have worked out. But would I have traded the same stocks? No, because what I'm looking for is I'm looking for the price action on the 4 hour level to actually have breathing room, right? Because if it's still stuck in a trend and it's not showing me a clear direction, do I want to go and risk that much money on a trade just because I want to trade that day? No, right? So everything has to work out in your favor, meaning if you already have your set of rules aligned, right? Those certain criterias have to meet with each other before you even decide you want to enter these trades, because essentially what you're doing is you're putting yourself, you're putting yourself in a lot of risk if you don't figure out whether you're entering it at a good level or not. What is my scalping strategy? For example, today, it's easy. Okay. Here's the thing. So on the 4 hour level, and here's what you have. This is the type of mindset you want to have when you're trading. So first of all, on the 4 hour level, what did I see? What's already happening? When today opened, what was I looking at on the 4 hour chart? What has already happened on the low on the bigger time frames? I had a crossover, I had a breakout of the bull flag, I had the breakout of the actual bigger trend. Right now, on the 5 minute chart, what do I see at the open? I see that we retested yesterday's highs, right? We retested yesterday's highs, and pre-market created a tight dip, meaning we didn't even dip below the second high of yesterday. Does that make sense? So this is the first high of yesterday. This is the second high of yesterday. This was the third high of yesterday. Now, SPY didn't even break below the second high. What did it do when it went down below, when it went down to the second high? It made a support level and it bounced on the second high, right? And it consolidated after hours, and pre-market we pumped. So what is your initial thought on what you think might happen? That we're finally going into a bullish trend. And what has been happening lately, the past month, 2 3 months, 4 months, anyways, the market's been tanking. So we've all been waiting for this bounce to happen, and it's been happening right before our very eyes this whole week. Did all of you manage to catch this bounce? So to recap, you look at the weekly level. Did I even look at the weekly levels to make these swing highs and lows? No, I didn't need to do that. All I'm looking is for swing highs and lows on the daily, and then use the 4 hours to find. So find swing highs and lows. So here, guys, I'm gonna write this down. One, find swing highs and lows on the what? On the what? On the daily frame. Two, do what? Jeez, who keeps trying to enter the room, bro? People keep entering every 2 seconds. I can't even type. I want to close the room. Hold on. Okay, the meeting is locked. No one else can join. Okay, number 2, find stochastics. You make crossover on the 4 hours plus any patterns after. Now, number 3, find what? So number 3, you want to find the nearest support and or resistance on the hourly. Number 4, find. So if you're looking at, before the market opens, what you can do is you can find what did we just look for right now? What did we just see? What? Right here. What did we just see on the 5 minutes? Find bounces or dips before market open. and find highs or lows for what? Find highs or lows that retested previous day. There you go, Kevin. So these are the four things that are essential for me when I'm looking for something, right? So it's not just number one. It's not just, okay, find the swing highs and lows. It's not just find the stochastics and the EMAs on the 4 hours and any patterns. No. So one has one, and then two, and then three, and then four. Now, once I have all these four, once I can conquer this four, any trades that I will make, I won't even worry about it. I won't even worry about it because I've already checked off everything that I needed, right? There's such a little chance that the stock isn't gonna hit. You know, there's such little chance that you'll be red because you're already looking at so many things that doesn't even usually happen all at the same time. Does that make sense? That's the key. I'm looking at things that don't usually happen at the same time. So when it all happens at the same time, there's a lot of synergy and synchronization. So now, now you're like, damn, the flower has bloomed. So the indicators that I'm looking at is what? Stochastic slow, 9 EMA, 21 EMA. Would you use this crossover on the 1 minute time frame? No. Hell no. You're just gonna see a bunch of zigzags on the 1 minute time frame. So what key levels do I enter on the breakout? So what key level? So when I look, when I'm trying to find key levels on the, if I'm looking at the nearest support and resistance on the hourly, am I making new support and a new resistance, or am I using what's already there, such as the swing highs and lows? Essentially, I'm using what's already there, right? I'm using what's already there. Now, the only time where I make new ones is if the stock opens up and it's too far from where we open up to where the next swing high is. Because at that point, if let's say you're looking at SPY and SPY has an ATR of $5 and the next swing high is $8 away, do I want to wait $8 for me to enter a trade? No, because at that point your stock is already above its ATR and you can't even freaking, at that point you can't even, you can't even make money. ATR is the average true range, meaning it's so all these names and all these stocks, they have what's called an ATR, meaning it only moves a specific number every day on average. So what you're doing is essentially you're looking at the past 30, 60, 90 days, and you're gonna figure out how much do these names move in every single day on average. So if you can find an average for all the stocks. Can you briefly explain the stochastics? So the stochastics is like I said, it's a momentum indicator. Okay, it's a momentum indicator. All I'm looking for is the crossover to happen, and if we go above the 80 on the stochastics, then that means the momentum is strong, and if it's below the 20, that means the momentum is weak, meaning it's bearish. Stop asking me if you can use this on a 5 minute. See, here's a problem with you guys, people in general. Here's the problem. You're trying to, so what you're doing is, I told you what I look for, right? And you're asking me, can I do this on the 5 minute? Can I do this on the 2 minutes? Can I use this on the 2 seconds? Can I use it on the 1 second? What you're trying to do is you're trying to tweak this to what's convenient for you, but you just don't understand the simple fact that all of this, if all of this happens, then you have a good trade. You have a really high probable trade. You can use the 5 minutes. Yeah, you go ahead, fucking use the 5 minutes and see what happens. Right? You stop asking me if I can use this on the 5 minutes because you can't. Why would I write all this down if I can just use the 5 minutes? I've already tried that. Like I've tried that so many times. Well, why do you think it comes down to having all of this? Like a few months ago, 6, 7 months ago, I didn't even have all this written down. I only had I only had number two. I only had number two written down last year. That's all I looked at. Right. So now that I'm adding 1, 3, and 4. That's what's allowing me to turn 1,000 into 25, 10 to 100, 5 to 25. And I'm going to try to get that to 100 using this. Right. I tweaked what I thought I was good at. And now I have a whole recipe of what I need to be able to be, to be able to kill it every day. Because usually if the market's going to move a few points in one direction, you will find this 4 in a stock. Like you'll find this whole thing. Right. So how do I and when I'm looking for stocks, right? For those of you who didn't see earlier, what am I looking for? So look at my trade log and look at the names that I traded. Am I trading 20 different fucking names like some people? No, look, I just use SPY, Tesla, Netflix, AMD, and Amazon. That's it. You don't need to trade 30 fucking names. No, it's not Brett. Brett doesn't even do that. I'll do it like that. He tries to make you guys make money by trading a lot of names, but you don't need to trade a lot of names. He's just been trading shop a lot. Like for example, I put a signal for Snapchat, I put a signal for Facebook, but I didn't get into it because I had already ran out of buying power. So, you can look for a lot of names, but you don't need to take 20 different names. Like for example, Bank of America went from 8 cents to $1 in fucking 3 days. 8 cents to $1. That's like 800%. You know what I'm saying? So I know that, what I'm doing works, and I'm trying to kind of instill it into your head, and I'm trying to get it so you guys can understand, so that, if you're in the group and you're watching this trade, or if you're in my class and you're watching these videos, you understand where I'm coming from, and you can do it yourself. Because it's like, what's the point if you're okay, cool, you're paying for signals and stuff, but don't you want to be able to do it yourself? It'll be so much, you'll have more gratification knowing that you can do this by yourself. You don't even have to like trade by yourself. You can just have trade ideas. And if, let's say, me or Brett or anyone else you follow have the same trade ideas, it'll make you feel a lot better, because now we're looking at the same fucking thing. So stop loss percentages, easy, right? So how do I set my stop losses? So here, I'll add that to the equation. When I'm doing stop losses, right? What am I doing? I'm going to use, so here's the key, right? Here's the key. Use 15-minute EMAs as your first sign of stop loss. Now, if the 15-minute moving averages, right? If the 15-minute moving averages are below a 30% stop loss, then you must, yeah, that was a good question. Then you must stop yourself at 30%. Now, yes, of course, obviously the stock can come back up. It can come back up. And that's the number one response I get from people. Well, what if the stock comes back up? What if the stock comes back up? Here's the thing: you don't want to, you don't want to find a trade that'll do that. And you're like, well, you don't know what's gonna happen. You don't know what's gonna happen. You don't know what's gonna happen. I don't know if it's gonna go up. I don't know if it's gonna go down. Well, I fucking know that, dipshit. I know you don't know that. We none of us know that. But if you feel me, if you have these 4 points, then you can kind of have an understanding of where the price level is and whether you're getting into it at a good time or not. Because let's say you're getting into a stock that's already above its moving, that's already above its ATR. Don't you think that your stop loss has more of a chance of it to hit? Exactly. But when you're But if and when you're looking at names that have a lot of room for it to run, by identifying how much room it has and by identifying whether it's testing a swing high and low from the daily, and whether it's stochastics and the EMAs has crossed over on the 4 hours, and whether it's already above or it's close to where the nearest support is. And if it, let's say, if it had a nice run the day before, did it settle down after hours? Then you're going to find a good trade, right? Because what happens pre-market and after hours is it can tell you whether the day is going to be good or not. Because if we have a big dip after hours after a big day, then what do you think is going to happen when we open? We might see a sell-off, right? We might see a sell-off. All right, I'll show you one last thing. So here's the 15 minutes, right? Here's the 15 minutes. So if you're entering a trade right here, for example, if you're entering a trade right here, if let's say you enter the trade right here at this level, this breakout right here, your stop loss, oh shit, my bad. So let's say you're entering this trade right here. You're entering this trade. Right? Now, first, what you want to do is this. You want to make the previous high your support level, right? Now, for some people, when it dipped below here, what do you think they did? They sold, right? They panic sold because they just got caught, right? The market makers got them. Now, if you set your stop loss below the moving average, right, a little bit below the closest moving average, then you're giving yourself a little bit more room, right? You're giving yourself a little bit more room. Yeah. Here's the thing. But as it's going down, you'll see, right? Sometimes as this is going down, this is like a 15% loss. By the time it gets down here, you're at a 20% loss. But the reason why people sometimes don't even focus on the percentage number is because they're more afraid of the way the candle looks than how much they're actually down by. That's the fucking trip about it. That's the whole psychological aspect of looking at candlesticks, is some people get scared of the way the candle looks rather than wait for the candles to retest. And that's facts, right? You see a fat red candle going down, you're scared and you're like, dude, I gotta sell, I gotta sell, I gotta sell, I gotta sell. But you don't even wait for the moving average to test, right? You have two moving averages that act as a support and as a resistance. Why don't you wait for at least the first one to hit? Now, if the first one is at a 30%, then you cut your loss, right? You cut your loss. Now, as it's going down, right? As it's going down, if we dip, if we come back up again and we hit our entry again, what can you do? You can re-enter and buy more. And what you do is, as it's passing your entry, you raise the stop loss because the moving averages get higher, right? Once it gets here, you raise your stop loss. And then you keep raising it, keep raising it, keep raising it. Anyways, how many guys do you guys learn a few things today? So I have a So essentially, so I have these classes happening on these dates. I have these, what date is today? So today's the 27th. So I have one tomorrow. I'm gonna do one tomorrow, and then one on the 30th, on the 4th, on the 7th. And this is only accessible to people who are in the class pass. Pretty sure some of you are, but hopefully by 2 months' time, I can get a lot of people that are in there to become profitable by themselves. How many of you guys are already in there? So I've already posted like 40 hours worth of videos on this Discord server, which like I used, the classes, the old classes that I did for like $1,000, $2,000. I put some of those videos in here. And how many of you guys think it's worth it to pay $30, $50 for, first of all, to get these lessons and then to get the older videos? So you can literally, for the next week or two, for the next month, if you don't even like looking at videos, for the next month, you can preoccupy yourself with watching this shit, right? You can preoccupy yourself with watching this shit. But, it's not that hard to, I'm saying it's not that hard to be profitable, but it is hard because you guys need to learn that it's not all about your strategies, and it's not all about, you first have to find your balance with your trading. Once you find your balance, I'm telling you, you'll be all right. I believe that. That's the link. If anyone wants to get into the class pass, gonna do the class tomorrow. Hope you guys like today's class. Please, what's it called? Here, I'll go back to the page. I'll go back to the charts. If you guys can tag me or something. Tag me on Twitter, please. Or Instagram. And I also linked the class pass to you guys. By the time I hit like another 100 or 200 people, I'll probably raise it because I have to pay more for Zoom. But thank you guys for showing up. Who's coming to the Miami live trading with me and Brett next week? So I posted a form that you guys have to actually fill out, so I know how serious you are. Because last time, dude, it was so fucking unorganized that we didn't even have enough people show up. And then I had all these people DM me like, yo, I wanted to come. But it's gonna be next week. I think on Wednesday or Thursday. We'll see. But I'm gonna post a form on Twitter and you guys can sign up for it. You guys can all, like, here's the crazy part. If you guys can all organize yourselves, you can even stay at one spot and we can come to you guys like at night. We can go chill and, talk game, all this shit. But it's up to you guys. Anyways, for those of you that want to join the class pass, here is the link. LA, I'll do one next month. It's easy. I'm moving to Miami, so we'll see. But anyways, thank you guys for showing up. Hope you guys tag me. I'll post this video by the end of the day. Hope you guys learned something. Remember, tag me. Take a picture. If you guys, okay, here's what I do. Since a lot of people are already leaving the Zoom, I'll choose one person and I'll pay for your flight to Miami. If you guys tag me on Twitter, I'll choose someone tomorrow. Why am I leaving LA? Because because it's whack, bro. It's just whack. I hate that place. Definitely not. Yeah, because fuck LA. Anyways, I'm gonna end this now. Tag me, guys, if you haven't. Choose someone easy. If you're from another country, I'm not buying shit. The fuck. Anyways, see you guys. Tag me if you haven't. Post the video up tonight.